Australian high net worth individuals or HNWIs invest in a variety of real estate types, including residential properties, commercial properties, and land. Luxury residential properties in prime locations, such as Sydney and Melbourne, are particularly popular. Commercial real estate, including office buildings, retail spaces, and industrial properties, also forms part of their portfolios. In a guest lecture at the University of Melbourne, our money expert, Lionel Lee, explained how real estate fitted into the financial portfolios of Australian HNWIs. He also explained why HNWIs place a portion of their net worth into local properties during a fireside chat with Professor Piyush Tiwari, faculty and students. Lionel suggests we start by understanding how much of the average Australian HNWI's overall assets consist of real estate. What percentage did you guess? 2023 data shows a range from 29% by Premium Investment Trends High Net Worth Investor Report of 1,531 HWIs, to 48% according to a LGT Crestone survey of 1,000 richest Australian families. So why does real estate play such a significant role in the financial portfolios of HNWIs in Australia? Lionel shares 6 reasons in this video. The Australian property market has shown strong growth, especially in major cities like Sydney and Melbourne. Sydney's median house price has nearly doubled in the past 10 years. SQM research data show that the weekly asking price was $881,473 for a 3-bedroom house in 2014. It is $1,661,751 as of March 2024. SQM research data shows similar growth in Melbourne, where March 2014 was $624,410 for the average 3-bedroom house, rising to $1,110,758 in March 2024. For HNWIs, having a diversified portfolio helps spread risk. Real estate, being uncorrelated with the stock market, adds a layer of protection against market volatility. Case in point, ASX 200 reported a 36.3% drop in March 2020, but house and unit prices up 2.6% and 2.7% respectively during the same period according to Domain. According to the Australian Bureau of Statistics, the average wealth of the top 20% of households increased substantially due to rising property values. This is particularly appealing for HNWIs looking to preserve their wealth. Australian property values continue to outpace annual CPI inflation. Annual CPI inflation peaked at 7.8% in December 2022 quarter before coming down to 3.6% in the March 2024 quarter. According to CoreLogic, rent values have increased at more than 8% over the same period. Dwelling values across Australia have also rose by 67.5% over the past 10 years to December 2023. Banks and financial institutions in Australia are typically willing to lend substantial amounts against property. Many HNWIs leverage their real estate holdings to invest in other assets. HNWIs can readily borrow 80% of the property value, and up to a maximum of 95% in some cases. At 20% down on the property, the leveraged returns are at a ratio of 4 to 1. The Australian tax system offers several incentives for real estate investment. Negative gearing, where the cost of owning a rental property exceeds the rental income, allows HNWIs to deduct losses against their high incomes, thus significantly reducing taxable income. Capital gains tax discounts for properties held for over a year also make real estate an attractive investment for HNWIs looking to minimize tax liabilities. There is a strong cultural preference for property ownership. Owning prestigious properties also serves as a status symbol, and HNWIs often seek to enhance their social standing through high-profile real estate investments. Real estate is a cornerstone of the financial holdings of HNWIs in Australia. It offers both stable and leveraged investment returns as well as portfolio advantages in terms of diversification and tax benefits. We hope you enjoyed this video. Subscribe to our YouTube channel for more guides to help you invest better. Also visit our website www.intothemoneyverse.com for more guides and tips to help you become a HNWI.